melt up, gold, commodities, and a crude awakening. It is perhaps the most euphoric or catastrophic two-word phrase an investor can hear. Commodity and stock futures have maximum allowable limits for price appreciation or depreciation. It is an attempt to avoid catastrophic blowups to investors who are on the wrong side of the trade. Only under the most volatile of market conditions do we ever see a melt up, known as the limit up, or a meltdown, known as limit down scenarios. We are seeing these scenarios in real time right now. I just came back from a site visit in Mexico, and just before that, I was at the largest institutional mining investment conference in Florida. Billion-dollar fund managers, family offices, hedge funds, you name it, plus the most important natural resource companies were there, all trying to strike big deals for the coming year. It's literally the who's who of the investment and natural resource worlds colliding. The deal room this year is extra spicy because of the Russia and the Ukraine situation. Commodity prices are soaring as tensions between superpowers escalate globally. The rush to safe havens is on. This sets up the US dollar to continue to dominate the world as a reserve currency. It is times like these where all the cards are put on the table. Where is the true safe haven? You aren't seeing people rush to rubles or the euro. They are rushing into the dollar and gold, both of which have appreciated sharply since the conflict began. This is a world I've described many times before, where we can have both a strong US dollar and strong gold prices. Gold has spiked higher over the past 2 weeks, up close to $250 per ounce, and it hit as high as $2,067 per ounce as this recording. We are paying close attention and have loaded up on the best gold stocks in the Katusa Resource Opportunities portfolio. Global energy prices soar. Oil has ripped nearly 60% higher this year. Brent crude, which is a key European benchmark oil price, has now taken out most of its previous resistances. It is within striking distance of its all-time high set back in August of 2008, which was just before the global financial crisis took off. Why is crude oil rising? The reason why oil is soaring right now is because Russia is one of the world's largest oil producers and oil exporters. If Russian companies, for the vast majority, get shut out of the SWIFT banking facilities, it effectively reduces to zero any oil that would normally be routed to Western countries. This represents millions of barrels of oil in an already tight market. The United States just banned oil, natural gas, and coal from Russia into the United States. President Biden has urged all other nations to do the same, but acknowledges that many cannot do so, like Germany, for example, without some time to secure alternative sources of energy. President Biden did not include uranium in the import ban. I discussed many of these issues in my 2014 book called The Colder War. I know this will sound absurd, but the US has already given sanction waivers to Russia's largest uranium company, which owns Uranium One, which is called Rosatom. When the major media outlets finally understand the absurdity of this sanction waiver, things will change. Uranium interest. Elsewhere in the energy market, uranium has caught a bid because of this. It just broke $50 per pound for the first time since 2012. As I have written about many times, the former Soviet Union produces half of the world's global uranium. As utility companies look to avoid doing businesses with the FSU, this is going to spike spot prices. Just like with avoiding Russian oil, new uranium can't just be created out of thin air, and this has and will continue to spike prices. This is a big wild card. Nations will start voluntarily rejecting Russian nuclear fuel, the way Sweden has just done. Sweden only has 6 operating reactors, but that alone has taken the spot price from 43 to 47 in 3 days of Sweden's announcement. More nations will be pressured by their citizens to follow Sweden's lead of voluntarily avoiding Russian uranium and commodities. This will have an upward price pressure on the uranium spot and long-term price. One would think that if Russia continues its advance and increase the land grab in Ukraine, the energy flow would be a sacrifice EU would have to make once they secure alternative sources. Time frame? Within 12 months. Keep an eye on uranium as the mainstream narrative continues to shift towards this carbon neutral fuel. Even Elon Musk is now on the nuclear wagon. On the topic of net zero, how does this war affect carbon markets? Very bullish for carbon markets moving forward. Here's why. Because of the flow of Russian natural gas could be slowed significantly, Europe will have to switch to coal to make up the difference in the short term, which will replace natural gas for electricity generation. Coal emits much more CO2 than natural gas, meaning the utilities will have to offset those emissions. The transition to green and non-Russian fossil fuels is going to take years, but Europe and the West is committed to this. We are very early to the carbon bull market. Metals markets rip higher. We are seeing this in the nickel market in even more aggressive fashion. Russia is one of the largest nickel producers globally, and because of the fear of not being able to ship the nickel, the spot price of nickel is soaring. We have just seen the most extreme move in the history of nickel's price, which just soared 90% in the last hour, as you can see in this chart, leading to the largest per dollar gain ever. This is going to have a massive ripple effect on the steel industry, which utilizes 70% of the world's nickel production every year. Elon Musk and company won't be happy either, as nickel is a core ingredient in many of the EV batteries built today. Right in the breadbasket. Even local markets are feeling the effects of the conflict. Wheat traded in Chicago's Mercantile Exchange, known as the CME, is up 70% and has gone limit up in 6 straight sessions. Last week alone, wheat prices surged over 40%, as you can see in the chart here. Wheat is just one of the many soft commodities which are being bid up aggressively. Russia and Ukraine are large suppliers of grains, vegetables, and fertilizers. Food prices around the world are already high and are likely heading higher. What we are seeing right now is called crossflation. This is a term I created over 2 years ago, wrote about it in my book called The Rise of America. If you're more interested in this, please see the book. As food prices go higher and GDP growth slows to this conflict, stagflationary concerns in Europe seem to be a scenario that is worth preparing for. The crowd is paying attention. The number of mining companies in the S&P 500 will increase, which means an increase of the flow of capital into the sector. For example, at the end of the Cold War, there were 20 mining companies in the S&P 500. Today, there are 2, as you can see in this chart. Look, this is first published here with Katusa Research. Expect this to change. Why? We are in the colder war. We are amidst truly ugly and challenging times. Russia appears to be pot committed, and tensions are going to continue to escalate. Look, I feel horrible with what's going on globally, but I play the cards I am dealt, and there will be many generational opportunities in the coming months if you have the cash ready to put to work. Remember, the way of the alligator. You can follow along to see exactly what I'm doing and what positions I hold. It's all within the pages of the KRO, which is known as the Katusa's Resource Opportunities. Fortune favors the bold. Don't get scared now. Stay safe. Subscribe to the KRO, which is the Katusa Resource Opportunities, to find out exactly what prices I'm buying at and what price I sell at before the trade occurs. And you get to sell before I do. If you want to give your portfolio an edge, consider becoming a member and giving it a try for yourself.